Hello again, this is Alex with MasterChartsTrading.com and today is Friday, November 2nd, 2018. I'm recording this a little earlier before the market close, so there could be some changes after the video has been recorded, but I think it's better because I can get the information out earlier. So we'll look at Apple as it drops over 7%. Back and forth is most likely going to happen. Stocks are still in need of direction, and that direction still could be down. We could see a breakdown and a continuation to fresh lows for S&P 500, and the rest of the world is basically already there in a bear market. Look at the investment-grade corporates and treasuries. They make a new low. Mortgage rates hit a fresh high since 2011. It's the highest level since 2011, and home builders bounced, but I think they're within the downtrend still. We'll look at Forex as new highs are made. I think the bounce for vast majority of world currency is coming. This could be helpful to gold, and hopefully I won't forget, because a couple of weeks ago I did forget, but gold is somewhat resilient, more resilient than I expected, and it's testing overhead resistance. So we'll see if indeed we're seeing a reversal of fortunes for gold and dollar. And oil is testing overhead resistance, while natural gas may be ready for another leg higher. Alright, let's look at first, so here's Apple, most important thing on everybody's mind. Of course, Apple dropped, as I'm recording this, it's down 6.9%. Here's an upper left-hand corner where I'm hovering. Again, difficult to understand the reactions to earnings. Some say they can predict reactions to earnings. I really don't see it that way. I think the technical analysis is much more powerful than trying to predict what earnings are going to be doing or whatever. So here what I'm seeing, Apple is still in an uptrend. This is a bullish chart still coming down towards this blue line, and I'm thinking that would be a good place to be buying it, considering provided that the rest of the market is also in an uptrend. Here's S&P 500 ETF SPY. Caution on this one. Basically here on the 24th of October I cut my exposure in my retirement accounts further to stocks, and I'm just sitting in vastly cash, about 80% cash and about 20% stocks. Again, I have no bonds, and got rid of all of my bonds a while back. You know, people have different strategies, but when we get to bonds, I'll show you why I got rid of all my bonds a while back. So this chart is kind of in the middle of nowhere. I mean, notice the low on October 29th right there. It's pretty amazing how it basically nailed it right on the indicator line. So kind of interesting. Here's the futures. Not looking great. This is a rejection type candle today. On a 4-hour chart, we can look at 4-hour charts. I mean, you can trade on 4-hour charts using my indicators, MasterChartsTrading.com, at settings of 250. You can change the settings once you get the indicators. You can buy them at MasterChartsTrading.com. But here it's kind of cool. You can see this is a 4-hour chart. You can see a breakdown here on October 10th, and since then I would be shorting. So for example, here's one on 17th of October, a good opportunity. Potentially right there on the 31st of October, and even today could theoretically short here as well if you're kind of a short-term trader, but you do have to hold it overnight. Then towards the Monday night. So not a great looking chart, not a horrendous looking chart, just kind of in the middle of nowhere. So again, I'm looking for this level to either be breached or supported. So here's 2599 for the S&P 500 futures. That level needs to hold. If we see a close below that level, I think it could be game over for the entire S&P and the stocks in general. Here's QQQ. Apple is dominant force there. Yeah, it dropped a little bit. I mean, we're approaching those bullish levels again at 173, this blue line. Here's Google. You know, I'm just looking at biggest holdings of QQQ. Basically, Apple, Google. And Google is not looking good. I mean, look at this. There's a close below this yellow line. So this is not a good sign. This is basically a fresh low. I would avoid this one. Here's Facebook. Fresh lows. So QQQ somehow is still being supported. I would just like wait basically. I'm not, you know, this action on futures, S&P 500 futures is not great. And yeah, I would just wait with too many decisions at this time. I mean, look at IWM, small caps just collapsed, closed at fresh lows here. And you know, today, I mean, this action right around the red line, I'm going to zoom in right there. So if we close below this red line, this would have been, you know, basically a sign for me to potentially start shorting. But I'm still waiting for the general market, the S&P 500, to either, you know, break out and continue higher or break down and continue lower. So right this instance, it's just not a very equivocal chart. Mid cap, for example, to fresh lows, and notice again action, price action, exactly at this red indicator line. And yeah, pretty interesting. So what else? Let's look at world stocks. So let's look at Europe. Here's Europe, VGK. Recent fresh lows, kind of bouncing towards this yellow lines, and I would potentially short it like something similar to what happened here on the 4th of October, or you know, earlier than that. For aggressive shorts, this would have worked quite well. I think the bounce is coming to around 55, so me personally, I would wait a little bit, so towards this red line basically, so let's wait a little bit. Emerging markets, same thing, kind of bounce towards the aggressive short levels, but I think it could continue slightly higher towards the conservative short levels. Overall, bearish security, and I would generally avoid it. EWG, this is a Japanese stock market, already kind of that level where you just may want to consider shorting it if you're an aggressive trader. So overall, basically three, you know, enormous segments of the world markets. We got Japan, emerging markets, which includes China. Here's China FXI, same basic principle, bouncing towards the levels where I would be pretty comfortable shorting if you're an aggressive trader. And let me see what else. So overall, yeah, Japanese stocks, WG, emerging markets, European markets, not looking great at all. I would basically avoid all of them. I want to briefly touch on home builders and mortgage rates and how they are related. Okay, let's continue to bonds. Here is AGG, overall bond market. This is a fresh low. Here's LQD. This is a investment grade corporate. This is a fresh low. TLT. This is a 20+ year treasury bonds. Notice downward facing arrows here. Basically, this is a bearish security and it should be either avoided or shorted. So the latest one just really worked out. Notice how the indicator lines really touched, or rather the price touched the indicator line right there on October 26th and then unraveled lower, which is sometimes beautiful like that. You can find out more about them at MasterChartsTrading.com. Overall, TLT in a downtrend implies TYX, also known as 30+ year Treasury bond yield, at an actual fresh high. So if I zoom out, you can see that this is a fresh high since about 2014 for the 30-year Treasury yield. The 30-year fixed mortgage is even at the higher levels. It's approaching 2011 levels, which were topped out around 5%. So we're getting there. And obviously, if you have a higher interest rate, then people can afford a smaller amount of a house, or they can afford less house. So XHB home builders basically collapsed over 16%. This is an actual alert to my subscribers from 13th of August. That point, basically, I said I would not hold this under any circumstances. And notice the drop afterwards that came, 16% drop. Now we're rebounding again towards this, what I call aggressive short levels. Because if this is a bearish security, we need to either avoid it or short it or sell it. We can also buy puts or sell calls if you're sophisticated enough. So overall, obviously, bond market TLT or IEF, we can do 10-year treasuries, doing pretty badly, and interest rates by extension are climbing. So this is making things more difficult for real estate related investments, and also some of the interest rate sensitive sectors such as utilities and consumer staples, although consumer staples are doing not that bad. Overall, here's another example of what I mean. Junk bonds are at 52-week lows. Junk bonds and stock market correlate highly, so perhaps junk bonds are going to lead the stock market to the downside. Not a prediction. Okay, let's see what else we needed to cover. We got the home builders. We need to look at the dollar. So the dollar index, DXY. Recent highs, 52-week highs, this is on 31st of October, and now a normal looking pullback, nothing out of the ordinary for overall dollar index. Here I'm gonna brag a little bit, euro versus US dollar. If you have my indicators, you don't need to do anything, you don't need to listen to me even. In fact, I am now offering just the indicators. I'm gonna show you where to find my indicators. Go to MasterChartsTrading.com, click on Alerts and Indicators. So I'm offering a new type of service. We got indicators, indicators only, basically. And they're gonna be $29.99, I believe. Huh. For some reason the prices are not showing, but I'll fix that. Anyway, so euro versus US dollar, again, don't really need my input. All you have to do is just follow the system. System is well described on my site, and this is the way I do it. So, for example, here's euro versus US dollar, and here's the initial bearish break back on 25th of May. This is the initial bearish break, and from here on we could immediately short or wait for a little bit of a bounce. So a couple of ideas. Here's one idea. It was on June 1st. Couple more here, aggressive short levels. Here's the latest one, just the most beautiful thing. This is over 400 pips gain. If you know how it works with Forex, this is a leverage trade, so overall 3.7% drop in your favor, because you would have shorted it here. You would have sold euro versus US dollar up here, shorted here. So many other currencies are bouncing, and this is making things easier for gold. So here's gold, XAU USD. I think this is sellers selling here at around 1237 or so, and again we're kind of trying to approach that level. Notice this price action is quite telling. We're trying to notice this tails on the 23rd of October and 25th of October and 26th of October, and now latest one was on the 1st of November, yesterday. You can see the price is trying to break out, but it's still having a hard time. So it's possible we're gonna see a fresh move lower here. In fact, my subscribers hopefully made decent money from the short GDX trade. We shorted GDX. Let me show it to you. Here's GDX. Couple of alerts went out to my subscribers. You don't need a lot of movement because most likely you are going to be shorting using options, so you'll be buying puts, and they move like crazy. So this little move here from $20 to about $18, it doesn't sound like a lot. It's about 5% drop, and for GDX it's not a lot, but for options this would have probably been like at least 50% move, if not higher. So if you buy puts here, and you can just make a nice quick money here. So hopefully again my subscribers made some money, because this is what we're all about. We're trying to help you make money. Alright, so gold. Briefly, let's look at oil as it tests really critical level, I think. Here's US oil, it's a CFD, contract for difference. And notice where, I'm going to zoom in a little bit, notice where the price action is trying to bottom. My indicators are right at the 63.34. The price is really trying to stick around here somehow, but a break below this level could mean that now oil is going to be in a downtrend, and all of the oil related, for example, energy, XLE, they are, I think, in a bear market now. So I'm basically avoiding oil related as well. Natural gas, another CFD, NG. You can use UNG also. You can buy calls on UNG. I don't know, but I don't like UNG at all. So I would recommend that you have a futures account if you know what you're doing and you have a large enough account. But this looks like a bullish security, and I think we may see a breakout towards 3.4 levels. So if you buy it down here, this could be a nice move for you. Bitcoin, nothing really happened. So cryptos, I don't really see anything happening there. Again, head over to MasterChartsTrading.com, sign and click on alerts and indicators, sign up for one of the plans. You can select alerts and indicators, monthly, yearly, and also the indicators only, and it's going to be $29.99. You can sign up after the trial period is over. It's going to be $29.99. It's kind of hard to see, but I will fix it later on. Okay, if you have any questions, again, please send me a note. If you found this video useful, please like it and share it with others. Thanks for watching, and have another great trading week. Bye-bye.